Hi, and welcome to today's masterclass, Why Working with an Accountant is Less Expensive Than You Think. I'm Michelle Cornish. I'm a Canadian-based CPA. I've been working in public practice since the year 2000, and I wanted to share some information about how accountants set their pricing because I believe that it really helps you as a business owner to know what you're getting into. So there are a number of people out there that believe that it's expensive to work with an accountant. And my point of view on that from the other side of things is that it's all relative. So what's expensive to one person may be inexpensive to another. And I find that that's a common thing that I notice when talking with business owners is that some people find that my prices are too high and some feel like I should be charging more. So it really is a subjective thing when it comes to pricing, and it really depends on where you're at in your business and whether or not you feel like you're a right fit to work with the person that you're talking to. So I thought I would start by just explaining a little bit as far as how accountants set their prices, because there are a few different methods. And I think that once you understand that, it really helps to get a sense for whether you feel like the work that you're having done is valuable to you. So the most common way that accountants charge is by the hour, and there's nothing wrong with that. You can find out upfront what the hourly rate is. The problem is that when a job is being charged by the hour, you don't necessarily know how long it's going to take. And you can ask the person doing the work what they think as far as how long it will take and what the total costs are going to be in the end. But sometimes even that person can't say for sure. And it's not because of inexperience or anything like that, but so many times things come up that nobody could have predicted. Often clients will think that their information is very well organized, and it likely is, but it's not going to be organized in a way that the accountant or bookkeeper is going to want the information organized. So they might have to change things around and do things differently. And when they start looking at the file, they might find that things are a little more complicated than they originally thought. So in that case, the job is going to end up maybe costing more than they thought because they provided an estimate based on a straightforward job, but then, maybe there's some surprises in there and it ends up taking longer, so they have to charge more because they're charging by the hour. So that is one method that accountants use to charge. Another method is flat fee or fixed rate. The flat fee and fixed rate or flat rate and fixed fee, they're really interchangeable. They're really the same thing. And it's a standard rate for a job. So for example, would be an accountant or bookkeeper that charged a flat $250 per month to do your bookkeeping and maybe your payroll as well. Or maybe they add an extra $100 a month to do the payroll, something like that. So it's a standard rate that you know what it's going to be. It's going to be the same every month for the same work. That's the key. So if something else comes up, or maybe you drastically increase the size of your payroll, maybe you hire a whole bunch of employees, that rate might change. A lot of times the payroll is going to be charged based on the number of employees. So for example, I used to charge a certain rate for 1 to 5 employees, another higher rate for 5 to 10 employees, and then if it was 15 plus or 10 to 15, that would be another separate rate. So the standard flat fee or fixed fee is going to be the same every month for the same work. If the work does change, then things are going to change as far as the rate goes as well. Another way of charging is value-based pricing. And value-based pricing it's similar to the fixed fee in the sense that it is a quoted flat amount, but it could be different for two clients that have the exact same work that needs to be done. So the trick with value-based pricing is the person that's setting the price, they are trying to judge what their work is valued in the eyes of their client or customer. So that's why they could have two clients that have maybe the same type of file. So they both have corporate tax returns, they both need financial statements, they both need some adjustments and a little bit of bookkeeping. But those two clients are going to be charged different rates because the accountant or tax preparer feels like they can charge more and still be seen as providing a valuable service that's worth the money in the eyes of the one client, whereas maybe the other client they feel is a little bit more cost sensitive, so they're not going to charge them as much. So I know the way I'm explaining it, it sounds like it's really unfair because it's the same work and two different clients, but you see the same thing happening in retail. So for example, you can get the exact same product at two different stores. You could get it at Walmart and you could get it at your local mom and pop shop. So let's say that it's some laundry detergent, for example. That laundry detergent is going to cost different amounts at Walmart versus the local mom and pop shop. Now, depending on who's shopping, they're going to see that value in that product differently at the two different stores. So the person that wants to save money and they value paying as low a price as possible, they're going to want to get that product from Walmart. The person that values the local community and local businesses, they're going to see more value in shopping locally and paying more for that product than they would if they went to Walmart, for example. I hope that helps explain value-based pricing. It is really, it's like an exchange in a sense. So what one person values the work at and what the person who's providing the work, so the business advisor or the accountant, if they feel like they're getting a fair price for their services as well. So another fourth way that you can see people charging now, this is more common on tax returns. I don't see it as often with bookkeeping jobs because it's really difficult to do, but for tax returns, sometimes the tax preparer will charge based on the forms used. So each form will cost a certain amount. So a person that has more forms, for example, somebody that has a business that's getting reported on their personal tax return, that's going to use more forms than somebody that doesn't. So they're going to pay more. And the forms will have different rates. So a business form is going to be more expensive for the tax preparer to prepare than a form or a tax return that just has employment income. So the number of forms used is going to determine the price that the client will pay. This one I find is a little bit tricky. It's commonly used in places like H&R Block. I've seen it used. I don't know if they still use it, but the tricky part is when the forms have a different price. As long as they have a set schedule that shows you what each form costs, then it will be pretty easy for you to determine what your overall cost is going to be to have your tax return prepared by that person. Where it gets tricky is if they don't have a schedule laid out and have all the forms with all the prices on there so you can see. The other thing is you might not know what schedules you're going to need for your tax return, so it might be hard to determine the upfront cost. And the tax preparer might not even know, because again, it's one of those situations where it might seem like you have a very straightforward tax return to begin with, but then as they start working on it, they realize that you have a certain situation that you might be able to get more deductions because of that situation, or more credits because of that situation. So they're going to end up using more forms on your tax return, and then that's going to end up costing you more. So in my opinion, the value-based and fixed rate or fixed fee pricing are the ones that are going to give you a more clear picture of how much you're going to pay upfront. Now, I did mention in one of my other videos that you can always ask for a complimentary consult. Most professionals will provide this no problem, and it typically lasts about an hour. You can take advantage of that time and ask what's going to cost. You can ask for an estimate. You can even ask questions as far as how they want the information from you, so how they want things organized. Because if you can be really organized, that can help you save money on your bill as well, especially if you're organizing it in the way that that person likes to have the information organized, because everybody's different. Some accountants might ask for just a summary of everything. Some might want all the documentation and backup that goes along with it. So it really depends on the person. But definitely take advantage of the complimentary consult and find out how they like the information dropped off to them. Some also might use, maybe they have a paperless office, so they use an electronic process rather than you bringing in all the paper documents and dropping them off. And definitely ask for an estimate. If cost is a concern, then definitely ask them how much it's going to cost and if they can let you know if it's going to turn out differently. So once you have your estimate and they start working on the file, if you just ask them to please let you know if there's going to be any changes in the price so that you're aware up front and there's no surprises for you. And you can also, a number of places will have payment plans where you could pay, instead of paying a lump sum when you have your taxes done, that sometimes if it's only a once a year thing, I do recommend that you see your accountant more than just once a year, because there's lots of advantages to doing that as far as tax planning and business planning. But if you're seeing them only once a year and you're only getting billed once a year, you're going to have a higher bill. A lot of offices will allow you to spread that out throughout the year. Maybe they'll have some kind of a payment plan that you could pay them monthly rather than just paying at the end of the year when you have your taxes done. Some places will also ask for a retainer or a deposit. So it's typically half of the fees up front and then you pay the other half once the job is completed. Now, let's get to the main question for tonight's masterclass, and that is why working with an accountant is actually going to cost you less. It's going to be less expensive than you think. If you tuned in to some of my other videos, I talked about an example where I had a client that was supposed to be filing sales tax returns and they didn't know this. They were using a bookkeeper that was doing their bookkeeping for them, but they weren't filing these tax returns. So they came to me to file these tax returns. Hi, Yerika. Oh, I'm glad that you're learning a lot. I'm glad it's helpful for you. So they came to me to file these sales tax returns, and in the process, I noticed some mistakes that the bookkeeper had made when they filed the tax return. And this was for several years. It was about 6 or 7 years worth. And so once I corrected everything and refiled the tax returns for them, they ended up owing tens of thousands of dollars. You know, it was around the $90,000 mark, and a good chunk of that was penalties and interest on the back taxes that they hadn't paid because they didn't realize that the deductions that the bookkeeper had been claiming were not allowable. They were actually personal expenses that the bookkeeper had put through as a business expense. So that is a great example of how it's really not that expensive to have an accountant or a business advisor helping you out along the way, somebody that knows what they're doing, because it's going to save you, number one, the stress and headache of all those things like back taxes and getting caught up on returns from years and years ago, and the penalties and interest as well. If you're working with somebody that knows their stuff and you're seeing them on a regular basis, they're going to make sure that that kind of thing doesn't happen to you. So in this situation, I was able to get the penalties and interest back for the client. So the government waived those. They still had to pay the tax. There's really no way of getting out of tax. If you owe it, you owe it. There's really no situation that the government will say, okay, you don't have to pay that tax, that's okay. Maybe in situations where bankruptcy is being claimed, but in a regular situation when you owe the tax, you can't really get out of that. But when it comes to back taxes and interest and penalties, if there are special circumstances, so in this case, the circumstance, and I did have to argue for it, it took a couple of years to get everything sorted out with the Canada Revenue Agency, because it wasn't a typical situation. Usually the situations that the government will provide relief for interest and penalties are going to be financial hardship. So if something has happened and you just can't pay that, They'll waive the interest and penalties. You have to prove to them that you can't pay that, so you have to provide bank statements and all your financial information. And then they will set up payment plans on your taxes for you so that they're not constantly bothering you about when you're going to pay that debt to them. Other situations are if there was some kind of a medical situation that prevented you from filing your taxes on time. In that case, they will waive interest and penalties then as well. So in this case, with this client that I mentioned, what I argued was that they thought all these years that this person was preparing their tax returns for them, that they were doing it correctly, and they had no reason to believe otherwise. And so it was a tough argument because you are always, as a taxpayer, you are always the one who is responsible for filing your tax returns, even if you hire a professional to do that for you. So even if you hire a tax professional, you are still ultimately the one that is responsible for your tax return. The benefits to hiring a professional accountant or an enrolled agent in the U.S. as a professional tax preparer, the advantages to hiring somebody like that is if they make a mistake, you then have the recourse to go back to them. And often they will actually pay you your interest and penalties. They'll realize that they made a mistake and they will pay that money to you because of their mistake. And if they don't, then you have associations and organizations that they belong to that you can then go to and make a complaint against them. And sometimes those associations and organizations will help you out. Again, there's nothing you can really do about the actual tax, but with penalties and interest, there are some things you can do. So these are some situations where in my point of view, it's really not that expensive at all to hire a professional because you know it's going to be done correctly. You're not going to have the stress of worrying about it and feeling like you're always looking over your shoulder. And if something does go wrong, if that professional makes a mistake, you have a recourse to get your money back, to file a complaint. And actually, before you even hire the person, you can check up with them with their organization or association that they are a member of. So it's always a good idea to check on the person's credentials. All right, so I feel like I have blabbed on long enough here. So all this information and more is in my book. It's called Keep More Money, Find an Accountant to Help You Grow Your Small Business, Increase Profit, and Save Tax. And I will drop a link below here. It is on Amazon right now. And if you have any questions, leave them for me as well. Send me a message. However you want to get a hold of me is great. You can check out my website. There's a way of sending me messages on there as well. All right, I hope you have a great night, and I will talk to you soon. Bye.